Potential or existing homeowners may be wondering what this year will bring to the housing market.
That's right. You may be wondering if you should be buying, continuing to rent, or remodel your existing home. You know, existing home sales dropped for the 10th month in a row last November, according to the National Association of Realtors. Sales of previously owned homes fell nearly 8% from October of 2022. That's down more than 35% from a year prior.
Here's what's interesting, though. Despite a drop in sales, home prices have kicked up across the country. The median existing home price for all housing types was around $371,000 back in November, and that's up from approximately $358,000 in November of 2021.
All right, Jason Louris is here to help us figure it out. He is the co-founder and head of Parcel Labs, a tech company focusing on residential real estate data. Jason, let's just start with the very beginning of this. What's your forecast for the 2023 housing market? Buyers, sellers, who's going to win?
First of all, thank you for having me. It's an exciting time to be in residential real estate data. To talk about 2023, we really need to take a look at what happened in the last half of 2022. We had home prices starting to come down because of interest rates. And so you have, sky high appreciation from the pandemic now met with higher interest rates. And this has caused an affordability crisis. And so in the last half of 2022, that has set the stage for what's likely to occur in 2023. So there's two potential paths here in regards to 2023. Path one is we go into a recession. So that adds a third factor to home prices. We have the sky high home appreciation from the pandemic, higher interest rates, and a recession. This brings out buyers that have less secure jobs. So it's going to be an illiquid market because there's not going to be enough buyers to purchase homes. In the second path, we still have to keep tight control over inflation. And so the Fed will be carefully monitoring interest rates. In this scenario, we don't have to worry about the recession job security components, but home prices still need to come down because interest rates aren't going back to 3.5%. So for more buyers to enter the market, home prices need to decline a bit further. So in both scenarios, I see home prices coming down.
And so then, Jason, if there's a potential home buyer out there now, what's the next data point they should factor into a decision? Is it if interest rates, it sounds like you're saying, at best would stay flat. So where is our indicator about if a recession is kicking in now or if it's not happening yet?
Sure. So if I was a home buyer in today's market, I think there are opportunities to be on the lookout for. And you can look for these by looking for motivated sellers. So who do we know to be motivated sellers in today's environment? iBuyers. iBuyers are in the business of making money per home flip. Well, in today's market, particularly in markets like Phoenix, they're losing about 15% per transaction. So I would look for listings that are held by iBuyers and go in with great offers to give yourself an advantage. The second type of seller I would look for are developers. At the beginning of the year, housing starts were at a 5-year high. And there was also high labor costs and high construction costs. And the housing market was going through the roof. Well, that is no longer the case. And so developers are motivated to get out of this market as well. So I would contact developers and I would build relationships with them and be persistent on offering 10 to 20% below what their current asking price is. And then the third thing I would look out for is listing characteristics. So if you see a listing that has frequent price cuts, particularly on a home that's been on the market for over 30 days, that could be an opportunity to get a really good deal in today's environment.
All right, great advice there, Jason Louris. We appreciate you connecting with us.
Thanks for having me.